Exchange. Let's cross over to Wall Street, where the futures were pointing southwards on Monday. A bit of a revision. You're going to see that coming up on your screen now. About 1/10% for the Dow Industrial average. That's the stock futures. The S&P 500 about 0.19%, the negative 33, and the Nasdaq futures about 0.47% in the negative 33. All those three indices looking red on Monday, just ahead of the opening bell on Wall Street about an hour from now. Meantime, Australia and Hong Kong markets were broadly negative today following tariffs fight between the US and China kicking into round two. The ASX 200, that's the main index for the Australian market, recovered from its earlier losses, but still closed 0.12% lower at 61.86. Commonwealth Bank of Australia slid by 0.5%, while the AMP stocks lost 1.24%. If you look at the Greater China region, the Hong Kong's Hang Seng Index slid further as it traded lower 1.69%. The markets in Japan, South Korea, and China were closed for public holidays today, Monday. So the Monetary Policy Committee of Nigeria Central Bank has begun its fourth rate-setting meeting for 2018 in Abuja, the country's political capital. At this July meeting, the Central Bank MPC maintained the monetary policy rate of 14% and retained the cash reserve ratio and liquidity ratio at 22.5% and 30% each. This time, analysts are divided over the possible outcome of the two-day rate decision meeting after the country's inflation rose for the first time in 18 months to 11.23% in the month of August. Outside Nigeria, the Central Bank of Ghana has just left its policy rate at 17%. Kenya is expected to keep rates unchanged as well on Tuesday, while the U.S. Federal Reserve, the FOMC, likely to raise interest rates by 0.25% or 25 basis points at its meeting on Wednesday. Meantime, the Central Bank of Nigeria has revised the country's check standards and the Nigerian Check Printers Accreditation Scheme, and all that will come into effect 1st of February 2019. That's the implementation date. The Central Bank, in a statement signed by the Director of Banking and Payment, Mr. Dipo Fatokun, says the old standard, which will be phased out, will run concurrently the new for 1.5 years. He explains that from August 1st, 2020, only checks that conform to the new standard shall be allowed in the automated check clearing system. The clearing system and NICPAS were introduced in 2006 by the Central Bank to increase efficiency and safety in the Nigeria check clearing system. Let's keep it there in the Nigeria's backwaters. 12 crew members have been kidnapped from a Swiss merchant vessel in Nigeria's backwaters. The ship carrying wheat belonging to Maxwell Shipping was traveling between Lagos and Port Harcourt in Nigeria's Niger Delta. According to a statement from the company, the attack happened around 45 nautical miles southwest of Bonny Island. A spokesman for Geneva-based Maxwell says the company is working with the authorities and specialists to secure the speedy and safe release of those being held. And that takes us to the world of oil. Of course, a very busy weekend for the OPEC ministerial meeting. The cartel is forecasting U.S. shale growth to slow significantly after 2023 before peaking at 14.3 million barrels a day between 2027 and 2028. And that was contained in the oil syndicate's latest forecast on the global oil landscape. At the 10th OPEC and non-OPEC joint ministerial monitoring committee meeting, which held at the weekend in Algiers, OPEC says U.S. shale output should fall to an average of 12.1 million barrels per day by 2040, before moving up to 14.3 million barrels a day between 2027 and 2028. Shale was largely behind a glut of American oil that flooded the market over 4 years ago, leading to oil prices down to $30 a barrel from more than $100 a barrel in late 2014. And we're sticking with the business of crude oil in North Africa, where Libya's National Oil Corporation has announced the restoration of production at an abandoned well in the eastern field of Mesla by the subsidiary Arabian Gulf Oil Company. The restored oil facility is expected to generate 3,000 barrels of oil per day. The Libyan National Oil Corporation explains that the latest drilling techniques developed by the U.S. oilfield services company Schlumberger were deployed as production resumed at the well after 16 years of inactivity. The oil-rich North African country was producing more than 1.6 million barrels per day, with Mesla's output pegged around $70,000 barrels per day before 2011, when the country faced political deadlock an armed conflict. And it's a big day for oil, so we're sticking with oil, but this time in Tunisia. Tullow Oil has plugged and abandoned this Cormorant 1 exploration well in offshore Namibia after finding non-commercial hydrocarbons. The company estimates its net expenditure on the well now being abandoned at about $5 million. The company has a 35% stake in the PEL 37 license, where the oil well is located, alongside other companies, ONGC Videsh Limited, Pan-Continental Oil and Gas, and Paragon Oil and Gas Limited. According to Tullow Exploration Director Angus McCosgas, the company will analyze data gathered from the readings before deciding on any future drilling activity in that particular region. So, still the business of oil, don't get tired. Let's check out the price of crude oil at the international market. Right now, as we speak, where we've seen a 2% surge today as the U.S. sanctions on Iranian crude exports appear to be tightening global supply. And Saudi Arabia, over the weekend, ignored U.S. calling for a lower oil production to stem the price of crude oil resting now above 80. Benchmark Brent crude trading higher, $80.47 per barrel. Early trade today before easing slightly to around $80.40 at about 8:30 Nigerian time. This is the highest since May this year and one of the highest prices since 2014. International commodity traders Trafigura and Mercuria says Brent crude could rise to $90 a barrel per day by December this year and raise this past $100 in early 2019 once the U.S. sanctions against Iran are fully implemented from November. That's much from the world of oil. Let's come back and go back to the stock market. That's right after the break.